Hi, everybody. Welcome back for day 181 of This Is Not Advice. And for those of you who are here for the first time, I'm Roy. I'm a startup investor in the future of work. And I got to know Kat through some of her angel investing. And now she's started a company herself after having worked at some very successful big tech companies and venture-backed startups. And so our guest today is Kat Orkova, who started Vereto, rhymes with Pareto, not Dorito, which is enterprise software for finance professionals. And we're going to talk about a dilemma that a lot of founders face, mostly in the very beginning of their fundraising journey, but also oftentimes, sometimes for later stage rounds too. So today's question, Kat, is who should I pitch first, angels or VCs? And thank you for joining us.
Yeah, happy to be here. I've seen so many of these pop up in my LinkedIn. I've watched a lot of them.
Good with that.
Yeah, so excited to be here. And this is very timely because yesterday, my partner Rafa and I just announced Evening Fund. So we've been angel investing for a few years, supporting lots of founders, helping. Thank you. And we've been helping many of them with the same question. We often have people reaching out to us, folks from Facebook, Ironclad, my prior companies, places that, or just other places where, people have worked for a while, they think they're ready to start something new, they have an idea, they work on it a little, and then the question is, okay, I know I need to fundraise, but how do I do it? Who do I go to? What's the process? Is there a playbook for this? And that's one of the main ways we help founders is really lead them through that process to a successful fundraise outcome. So the first thing I say before you pitch anybody, and this is actually super critical, is you have to get your story together. Just like any kind of PR launch or anything else, if you're going to get in front of somebody and tell them about your company and you can't very succinctly explain what it is you do, talk about your product, your market, your founding team, and honestly, like, why would somebody want to invest in you? What is going to make you succeed? What is going to make you stand out? You have to get that story straight. But once you feel like you have a pretty good grasp of it, that's when you start what I refer to as the angel VC angel sandwich. So
I love that.
This is my personal playbook. There are alternatives. So for example, I have invested in a few founders who were already working within a VC firm as an entrepreneur in residence or as an advisor to their portfolio companies or just as a VC in that firm. And in that case, often what happens is you already have connections and you just get straight funded by lead investor right from the start. But for the majority of founders who don't have those type of connections, who have a great idea, maybe a great product, but they're not sure where to go or what to do, I recommend starting with angels. And specifically, what are you optimizing for? You're not yet looking to get the most money from these angels. You're really more optimizing for making sure that you have your story straight, understanding what resonates, what are the questions that you're hearing. In my case, when we were pitching our company, we really started with a few other founders who are also angels, and they are very experienced. Because what we found was if we just went to our friends, even very smart folks who are product managers or engineering directors, they
don't know.
They're like, okay, cool, this sounds great, but they didn't know to ask the hard questions. So when we went to those experienced founder angels, they were like, okay, what about this? This doesn't resonate. Who are your customers? Like, they could really drill in with us, and that helped us frame our pitch better, make it more succinct, understand what to emphasize, what were the strong points, what was unique. Because when you're talking about your own company, you often you think everything's wonderful, you think everything is great. But if you were to listen to 20 pitches, you'd realize, yeah, everyone talks about no-code tools these days. Everyone talks about how the future of work and things like that. So what is different about you? And that's what you get from these early angel conversations, really honing in on where do you need to emphasize and what do you need to fix or move into the appendix. So once you've done that, then you go on to your VCs, you find a lead investor. And then once you have your lead, you go back to angels, but in a very different way. So this time you're not changing your story. You're really just looking for, at that point, who are the people that I want around my cap table that are going to support my company? no matter how amazing your lead investor is, and I say this, I love our lead investors for Veretto. They have done everything for us night and day, but they're still just one firm. They're still just a handful of people. We now have over 30 angels as well at Veretto, and like every angel can give us intros, can give us interview help, can, and they have different areas of expertise. So when we assembled our cap table, once we had our lead identified, it was like, okay, we want go to market. We want folks that we're an enterprise company. So we want folks that know about pricing, packaging, positioning for enterprise software. We did not have a technical co-founder, so we did want some CTOs and engineering leaders that could help us hire our first engineers, and in particular hire our senior engineers. We were very much a design user-centric approach. We wanted to build a consumer-like company. So we got Andy Zabalski, former head of design at Uber Eats. He's been an incredible advisor, investor to us. So that's kind of how you think about your cap table at that point. And then once you've identified, this is what I need, here are the right people for those roles, then you're set up for success.
Yeah, it's such a cogent perspective on it. I love it. And so a couple kind of clarification questions. One of the things I've found, and sorry, let me also just say, one of the things that lands with me about it is the best advice on how to fundraise to me is usually from the people who have fundraised, not from investors like us. And I just wonder about, folks who miss out on that. And then I also think, and this is something I don't usually talk about in public, but hey, here we go. That the most value add investors, dollar per dollar, are even more than VCs, even more than us, are the current founders of successful venture-backed companies, because they just know they're in it right now, and they also have very little time, which makes their value per minute extremely high usually. And the founders of successful venture-backed companies are the center of the startup universe. And I will also add that there are some angels who can increase the odds of getting a VC in. And so having some early commitments or money in from angels can certainly help with that. And they're, usually easier to pitch, at day zero. Let's put it this way. A VC is more likely to be influenced by an angel than an angel by a VC, or a good angel by a VC, in my experience with it. But then one question that I think comes up often is, well, yeah, but I have Kat, are you an angel or are you a VC? You have Evening Fund, and you're also the founder of a successful company. And so figuring out who is an angel and who is a VC in that sandwich, when the bread and the stuff filling of the sandwich can blur into each other, is a little tricky. So how do you differentiate who's an angel and who's a VC?
That's a great question. And actually, Rafa and I are planning to write a post about the startup ecosystem that explains angels, syndicates, microfunds, actual funds, and the differences, because they have dynamics. And even when you are relatively experienced, when I, in my case, when I started Veretto, I knew some investors. I had been angel investing for a while. But even so, the general advice, if you're doing a seed round, is, hey, first go to the seed firms. Don't go to the ones that do A, B, C, D. They're too big. They're not going to care about you. They're not going to have the resources. I actually think that's often not true, or it's very dependent on the firm and the partner. But setting that aside, we followed that advice. And the first week, we spoke to primarily seed firms. But because we were building an enterprise company, we were raising a bunch of money. We needed to build a large product, and that meant building a large team. And it wasn't the standard, maybe I'm going to launch a consumer SaaS kind of play and see where that goes. And a lot of the seed firms said, we love what you're doing, amazing founder market fit, come back if you want to raise less money. But if my fund is 100 million, I can't write you that check. It's just too great of a percentage of my fund, which now I get, because there are companies I want to invest in out of Evening Fund, but it's just too high of a price. So I think it's understanding those dynamics. Had we known what each type of investor was before we approached them, could definitely have saved us some time. We could have gone to the right type of investors right from the start. And honestly, it can also be an emotional challenge for founders. If you're going to people and they're saying, yeah, this is great, but it's not exactly right. I think for us, fortunately, we got a lot of quick no's, and people were very clear that this was it was a mismatch of what we were raising and their fund size. but you can, sometimes it's a little less clear and you could take that personally. You wonder, am I raising the right amount? Am I raising too early? And it just makes it even harder. So having that clarity, and I think there are increasingly more and more tools and websites out there as well that try to bucket different investors and the growing number of investors. If you really know who you're going to and why they're the right fit, it's just going to set you up. And again, that's where angels can help. If you go to Angels First, they can tell you, yeah, no, don't go to that one. They only write 500K checks. Like they're not going to leave 2 million round, or don't.
Totally. Yeah. I mean, I love that, that set of insights, and it raises, we could do a whole thing on like, what order should you go to the VCs in and that kind of thing. But the structured wisdom is nothing less than I would expect from a member of the Stuyvesant High School Mafia, which if any other peg legs are out there, we do find each other. So please reach out anytime. And I think, Kat, that may be how we originally connected. Anyway, I can't remember.
Yeah.
But I love that input. And I'll just put out one request for software out there, or request for a product, which we try to build an early version of this. But as much as you can find lists of VCs, it is still really hard, like, to make your list. If you wanted to do like a faceted search of like somebody who invests in biotech and writes checks in this range, and I'm not excluded because of geography, just knowing like for whom am I eligible, and please spit out a list of people, not just firms. You can't do it. I mean, you can't do it. And if such a thing were active enough, I actually think VCs would maintain their line item in the database. We tried to do one for New York, and we never quite focused on it enough to get it going. But if anybody wants to build that VC finder, please hit me up. Maybe the universe will respond. But Kat, that was awesome. Not advice in the sense that, you're not telling people there's only one way to do it. You're describing a framework for how to think about it that folks could assess for their own circumstances. And I'm really grateful for that. Would love to do more of these if you're willing in the future.
Yeah, that's super fun. Would be happy to do more.
Awesome. All right. Well, thanks everybody. And thank you, Kat. And to